Mahindra first, because that's the company which is also in focus on the back of its quarter 4 earnings. Now, very interesting what's happened with Tech Mahindra in today's trading session. Started with a 4% down move. We've seen a stellar recovery on the stock, and that's largely on the back of its quarter 4 earnings that came in yesterday, as well as some of the key commentaries that the company mentioned in its conference call as well. So first, in terms of earnings specifically, we have seen just about a 0.7% growth in terms of revenue, but EBIT margins come in at 10.5%. Expectation was about 10.3%, so definitely a beat there. We've also seen the profit was up 18% in this particular quarter, coming in at 1167 crores in terms of profits, largely supported by the other income segment, but overall the services business has been growing. The IT segment revenue was at 11,327 crores. And one of the key strong points in this particular results was the deal wins, $798 million in terms of deal wins for quarter 4. This takes the consolidated TCV to almost $2.7 billion in FY25, and that's up 42% compared to the previous year. So it's a big deal win that the company has managed to do in this year. We've also seen its top 3 verticals, which is communication, manufacturing, and BFSI, all either contribute flat to positive growth in this quarter. So hence, that was one of the key things. The other aspect which might have led the stock to be under pressure was in terms of EBIT margins. Now, FY27, the company's vision is to go to 15% EBIT margins. Currently, between 10 and 11% is where it is. And in terms of brokerages as well, that's the reason we saw some, in terms of brokerages like Macquarie as well as Citi being bearish. But I want to pick up Kotak first in terms of, the brokerages specifically, because we did see some in terms of 3 key points that they are making. They've mentioned that, deal wins is providing them the much needed portfolio shift to high margin businesses. The second point they are making is that they believe that the company is on track because of these, high margin deal wins to reach that 15% EBIT margin target. And finally, they're saying that a successful turnaround, which is the base case scenario, should lead to a re-rating in the multiple. And similar view coming from Investec, they actually have a target price of 1,672 rupees per share as well. And again, they mentioned that, they believe that this is the highest growth in terms of deal wins versus peer group, as well as, that company could potentially be the highest growth in the next decade. But Lancelot, good afternoon, and thanks so much for joining in today. I just wanted to start off with the IT space as a whole. We've seen Tech Mahindra come in with good earnings today. Emphasis also strong earnings, but some pressure on stocks such as LTTS after earnings as well. What do you make of the, and Cyient as well, another one which is under pressure because of earnings? So how are you viewing these 3-4 companies in terms of earnings, and any pick that you have to look out for, at least in IT?
I think, these companies are in different spaces because, L&T Tech is actually providing engineering services software, whereas Tech Mahindra are more into the telecom as well as, the general software that we are seeing, software services across various categories like banking, financial services, insurance, etc. So they are mostly in the implementation services as well as in the maintenance services. Now, I think that space, while Tech Mahindra did get significant deal wins in this quarter, whatever we hear from the commentary is that maybe going forward, things are taking a little bit of a pause from most of the companies in the light of what's happening globally. So we may see the subsequent quarters, things may slow down a bit. And so given that background, I think, Tech Mahindra is probably fairly valued at this point in time. And yes, you might see if the growth does continue, then it would mean a kind of a re-rating as far as Tech Mahindra is concerned. And as far as the space is concerned, I think, at the end of the day, AI, cloud services, digitization, these are all the areas where there is a lot of work still that needs to be done, and there is integration of various platforms that will be required. And most of these companies are poised to provide services in those spaces. So I do believe that, it's just a matter of some time before, work gets allocated and these companies are able to then grow their book size accordingly. So the space is good. Valuations are not that high at the moment. So one can look at, slowly adding to the sector and to the good companies in the sector over a period of time.